So welcome everybody, welcome to the Retired Living True series, and today's topic, paying for senior living. For those who don't know us, my name is Brett Janelle, and this is my business partner and beautiful wife, Annette Janelle.
Thank you.
And today we're going to talk a lot about paying for senior living. But before we do, we have a couple of things we wanted to cover.
Yeah, we have guests.
We have guests, firstly, so in the back of the room, our guests stand up. Well, everybody's guests, but we have some special guests that have flown in from all across the country to join us today. And the whole reason they're here, who has said to us before, are other people doing this across the country? Has anyone asked us that? I know there are people who have definitely asked us that. Well, that group of people in the back of the room are doing this across the country. And with them is Nikki Buckaloo, who's our coach, who got us started on this journey many years ago. And if it wasn't for Nikki, we wouldn't be here. Some of you might have had the pleasure of hearing Nikki speak about 2 years ago. We actually had her up here on the panel. But ourselves and this group of people spent the last 2 days masterminding how can we make this experience better for all of you, and how can we do it for more people across the country so all of us are better educated. So thank you guys for being here and being part of this.
And I just want to clarify, this meeting seminars, doing seminars across the country. So we really appreciate the fact that we have so many of us that can help spread the word, not only in our community, but across the U.S.
Wonderful. Who joined us this past month for community tours, just a show of hands? We had like 130 slots now. We toured
9, well,
we had 9 groups.
We had 9 groups and 5 communities that we toured. And there were quite a few of us that went, like I said, I think it was 67 people, so that was fantastic. And one of the reasons why we were touring the communities is just to know what options are. It's not necessarily that you want to move into a community, maybe that you want to live in your home for the rest of your life, but just knowing what your options are so you can plan for the future is huge. And so we really appreciate that you did that. Not too long ago, we got a call from some neighbors that were concerned about their neighbor. Her husband had passed away just a couple months prior, and he was the king of unfinished projects. Anybody have unfinished projects in their home?
Or anyone but a husband with unfinished projects? Yeah.
In her 2-story home, she had bathrooms that had been taken apart, and no floor. On the second floor, there was no floor at all. And so definitely the king of unfinished projects. So she was not only mourning his death, but living in a house that she couldn't take care of anymore and wasn't meeting her needs. And so the neighbors were concerned about her. So during this stressful time, who makes really good decisions when they're under stress? No. It is like the worst time to do it. So the fact that you're planning ahead and just knowing what your options are is huge. We helped her as far as making the move in the transition into a senior community. We helped her with all the stuff inside the house and sold the home. But that is not anything we want anybody to go through. So we care about you, and we want to make sure that you can make these choices when you're not under stress. And so we're really glad that you're here today to learn about how to pay for this. What does your future look like, whether you plan on staying in your current home or if you plan on moving into a community? What are the costs?
I can hear people whispering, going, I'm never moving. Which is totally fine. But who knows someone who's maybe had a fall or something that's happened or an illness, and while they never planned on moving out in that situation where they do need to find a plan B. Anybody know someone? Yeah, most of us do. Yeah, so as Ed said, it's all about having a plan B, knowing the options. And one of the things that some people miss out on, I think I've got a slide, is we have a senior community directory. It's up on the screen. Some people came on the tour, didn't get to pick one of these up, but we have extras outside on our table that lists all the different senior living community options here in northern Nevada, predominantly Reno, Sparks, Carson City, and it breaks them down by independent living, assisted living, memory care, group homes you can go buy. Basically, every option that you have available are listed out in here. So if you're interested in knowing more what are the options, or you want to tour a different community, we have all of the information about the different communities or options in here. So when you leave today, if you like one, they're on that table outside.
And this information is not only for you, but for those you care about, a neighbor, a friend. Pick it up and pass it on.
So when we talk about paying for senior living, we have three reoccurring questions that Annette and I typically get. The first one is, what are the senior living options here in the area? The second one that we get asked is, how much does it cost for these different living options? And the people who went on the tour would have found that information out, or some of it. And then the third recurring question we get is, how do I pay for this as I continue to age and may need care, whether it's in my home or in a senior living community? How am I going to pay for the care? How am I going to pay for my house that's aging along with me? Our homes as they age need maintenance as well, don't they? They need painting, they need a new roof and so forth. How am I going to afford all of that? And how do I budget for that? So we're going to cover those last two today. We're going to talk about the costs of the different senior living options. We're going to compare it with living in our current home so we can kind of see what is the difference. And then we're going to talk about how we actually financially pay for that. So could I have my panellists come up and join me? And while they're coming up, just for those who are new in the room, I'm going to ask questions on behalf of you, of our four panellists, and we'll do that for the next 50 or so minutes. And then around 11 o'clock, we have a little bit of housekeeping, upcoming events, but then we'll open it up to your questions that you can ask the panellists, and we'll have some mic runners. So if you have questions that come to mind, on your handout, there's a section there where you can jot down your questions. So I just ask you to hold your questions until just a little bit after 11, and then we'll get through as many questions as we possibly can. So, Melissa, could we start with you? Could you introduce yourself, who you are, why you're here today, and just a little bit about your background as it relates to this topic?
Sure. Hi, everybody. Good morning. My name is Melissa Hartman. I'm with Schultz Law Group. Our law firm primarily focuses on estate planning, elder law, guardianship, and probate. And for over a decade now, we've been assisting people with the VA aid and attendance benefit. So that's obviously what we're going to be talking about a little bit more this morning. Thanks.
Wonderful. Thank you, Melissa. Michelle.
Good morning, everyone. I'm Michelle Holbert. I'm with Guild Mortgage. I'm a residential mortgage lender. I specialize in reverse mortgages and programs that are geared directly towards seniors in helping them plan for their future. Thank you.
Thanks, Michelle. Trish.
Good morning. I'm Trish Trenoweth. I'm with Morningstar Senior Living of Sparks. I'm here to help you guys understand some of the costs and how we pay for senior living.
Hi, I'm William Palmer III. I'm a certified financial planner and a life and health insurance agent.
Thank you for all being here. So if I could start with you, Trish, let's talk about the costs of the different senior living options that are available here in our area. And let's just pull up the slide. Can you just walk us through the different types of living arrangements, what they kind of cost, so we have like a better understanding for those who didn't have the opportunity to do the tours with us this past month?
Sure. So there's different senior living communities. Some of you obviously came to tour that have independent living or assisted living, memory care. Some of us have all of them. Some have one or two. They'll range in pricing. An independent living is just your rent. So you're looking $2,500 upwards. Could be, I know the slide says $7,500, might be more depending on the community. Assisted living is rent plus care. So those are going to start at around $4,500, go up to maybe $8,000, and then care ranges from $500 to $4,000 depending on the community. Memory cares are a little bit different. Some are inclusive, some include some levels of care. So again, you've got rent plus care. It's a little bit higher end, a lot more care is necessary in that environment. Group homes are just a smaller version of what we do. There's probably a home in your neighborhood that is a group home and you don't even realize it. Some of them also will take Medicaid waivers. And they range from $2,500 to $7,000 or $8,000 and have different levels of care as well.
Thank you, Trish. And this information is in your handout, so you don't need to write it all down, but use that for reference. So if we looked at independent living, how is that different to assisted living? What are the couple of basic differences?
So the main difference is care. There is no care provided in an independent living. We cannot help you with your medication. We cannot help you get dressed. We cannot help you shower. Most of the communities will allow outside care to come in. We just can't send our care team over to assist you. So in the assisted living, you're going to have that care feature.
And then just looking at the slide, there's a big price difference between independent living, the lower range, and the upper range. So why $2,500 to $7,500? What are the differences?
In the independent living to assisted living?
No, just in independent living.
Oh.
What do I get for $2,500 versus $7,500?
Part is going to be the community that you choose, its location. Part is the apartment itself. It ranges on size, view. Some communities have full kitchens. Some communities don't. Some have more activities than others, depending on size. So that's the range there. A lot of the range is indicative to the size and view of the apartment.
Thank you, Trish. And then if we compared the starting price of independent living versus assisted living, there's quite a jump. It's like $2,000 more for the base rent. So why would the rent be different in independent living versus assisted living?
The biggest piece there is the care. So you have a 24-hour care team when you're in assisted living. They are there not just for whatever's in your care plan, those needs of daily living, your activities of daily living that they might be helping with, but they're there for anything else. If you need help to tie your shoe one day, they're going to be there for that. So you're going to have 24-hour care. You do not have that in independent living. So that is why the cost increases.
So these are big numbers we're looking at, aren't they? The costs per month? This is per month, or this is for the whole year?
That's per month.
Yeah, it is per month, yeah. So it's a big number. So how do we compare this with just aging in place? Most of us probably want to age in place, but things happen and change, or there's valid reasons why I might choose to be in a community over staying in my home. So how do we kind of compare? I think you'd helped us with a worksheet. Can you help us kind of like compare the cost of the community versus living in our home? Because what costs do we have in our home? Property tax, that's about it, isn't it? All we have each year is property tax, otherwise our house is free? No, not that simple? Help us understand that, Trish, when someone's trying to compare between the two.
So when you really break down the cost comparison, these worksheets are great so you can really see that side by side. You have to look at all of the things, not just either mortgage or property tax. But what else are you paying? You're paying for power. You're paying for water. All of those bills, those are included when you live in an independent or assisted living community. So you're not paying those monthly bills. We include cable. We have Wi-Fi. Some communities include landline phone. So when you add all of those pieces up, and also you're not fixing anything. If it breaks and you're living in our community, we come fix it for you. So there's no handyman. There's no getting help. There's no waiting for your son-in-law to come over and fix that for you. And then you have to buy him dinner. Any of those things that are on that list, you have to look at what's included. When you add up those numbers, you'd be surprised at how close that comes. There's no more yard service. We have a yard, and we have somebody that takes care of it. So you don't have to do that or hire anyone. So all of those expenses, when you look at them side by side with what we offer, will be a pretty close comparison, and you'd be surprised at how close that dollar number is.
Thank you, Trish. And this is in your handout on the last page, the comparison worksheet. I should have pointed that out. Has anyone had to replace a water heater? What are they, like $3,000 or something now? Some crazy price? Everything going up? Anyone had to replace a roof? Yeah, they're pretty expensive, aren't they? Anyone had to paint their house recently? Yeah, we need to do that every 10 or so years. That's expensive, yeah. So if you add all those up, we kind of forget about those things like over a 10-year period that really help offset the cost if we choose to be in a senior living community. Anything else we wanted to add to that, Trish?
No, I think that doing that side-by-side comparison and shopping, a lot of you did. You came for tours with a lot of our communities, looking what community do you like, what is the cost there, and then doing that side-by-side comparison will show you what you need and a lot of times what you're saving by moving into a community.
Thank you. So William, I want to jump to you to talk about Medicare and Medicaid and how they could help us pay for A, our living arrangement, or B, care that we might need at home or in a community. Because there's kind of a lot of misinformation, confusion. So could you help? Let's start first with Medicare, its role, and hopefully most of the audience already know, but just to clarify.
I can try. I took a 2-week-long course and still learning it. To keep it simple, Medicare is for those 65 or older and are disabled, excuse me. That does not really necessarily help for living situations. The idea between a good Medicare plan is to reduce medical costs, so you're not giving it to the doctor or the insurance companies, and you're paying it for your care. There are a few programs, but let's just be honest. Medicare and Medicaid are governmental programs. They're controlled by the government, and in 5 years, that means they might change. So you really need to do your research on what programs are available. And Trish could probably answer better than I ever could on what's available through Medicare right now. Medicaid is for any age, and to be blunt, means you don't have money. Medicaid is there after you've spent everything, you've paid for the $300,000 heart replacement, money's run out, and now you need a place to live because you can no longer afford living. That's what Medicaid is. And every state plan is different. So if you moved here from Utah, the Medicaid plan is different than Nevada. Medicaid is where you get family members to be caregivers. Medicaid is where they will house you. And if you've ever ended up in a situation where you make too much money to qualify for Medicaid, you need to contact an attorney for things like Miller Trust that actually drop your income to qualify. And that's actually how you get housing. But I'm going to ask, if you love the DMV and you want to spend every day there, you may like Medicaid living. I'm going to recommend for most people that's not a plan you want to take. And if you have to unfortunately plan for Medicaid living, you should start the journey to plan for that about 5 years ahead of time. It's not something you can just walk in and go, unfortunately my spouse passed away, the bathroom floor is dismantled, and I need a place to live in 6 months. That's not a normal situation where Medicare or Medicaid would be able to help, with very, very few limitations where that would be applicable. So unfortunately, there's not a good answer because politicians are involved. I'm sorry.
Well, that's why we call this the True Series, so people have information they can make plans on. So just so I understand, it sounds like Medicaid is a safety net for low income or no income for people who don't have financial means for other options. Would that be correct?
That's a close enough answer. I can give an example if you'd like.
Well, I just wanted to contrast that with, you mentioned about planning and 5 years, I think you said.
Yes,
Yes.
minimum.
So as a financial planner, would it be prudent of people to work out what options they do have available so that if they know they're going to be in that situation and don't have the financial means to afford one of the communities or to be able to stay in their home, that they can set themselves up through an attorney to have a Miller Trust so that their assets are protected so they can then use Medicaid? Would that be a...
Well, there's more than a Miller Trust. And if you give yourself more than 5 years, there's additional things you can do through an attorney and a financial planner to prepare for that. But again, this is a last situation. It shouldn't be the goal. But if, example, a spouse passes away, or there's Alzheimer's, or there's, stage 4 cancer, you may need to go down that path, yes.
Because if I have assets at that time over a certain amount, they're going to say, sorry, you're out for Medicaid, you just need to work it out on your own.
So what Medicaid is going to make you do is spend every last penny before you step in.
But I was wanting to give that money to my kids.
If it's over 5 years, you may be able to, depending if you do it right, and that's where an attorney will be a godsend. If it's under 5 years, let's say, I just happen to know the gift limit this year is $19,000. You give your kids $19,000. Next year, you end up in Medicaid. They're going to make you spend $19,000 before they'll help with care or living or anything else because they assumed you tried to hide it.
So I need to go back to my son and ask for that 19 grand back.
Yep. Or, unfortunately, I've seen people end up on the street trying to find that money, trying to get into a system, and then you have a several-year wait because you decided to be nice and help your kids. So, yes, if you're worried that that may be your plan, and you say, that's me 15 years from now, you're already 5 years late on planning.
So it's prudent of all of us just to know our options, to plan, not to put our head in the sand, but just to know what is 5 years, 10 years, 15, 20, where might I be? That'd be prudent for all of us?
That'd be very prudent. I see most people try to plan a year or two, and it almost always fails.
Okay.
With the exception of VA has little additional benefits, but that's for a VA expert.
Okay, and we'll get to that in a moment. So Trish, can we talk about long-term care insurance policies? Who has a long-term care insurance policy? Show of hands. Wow, a lot of people. Fantastic. So how do we use those? Should we use those? What do we need to know about these policies that many people here have?
Sure. It's great that you have them because they don't really offer that anymore the way they did. You guys have probably got great policies that don't exist anymore. I feel like you should use them because you paid into them, so that's a great benefit. Most of the communities some will bill directly, some don't. You pay and you get reimbursed. All of them are a little different. We can help you look at those and see what they offer, how much you get per day. That's kind of how they're based. It's going to work for an assisted living or memory care environment. It's not going to help you with independent living because most of the policies require us to be assisting you with 2 to 3 activities of daily living, which is showering, dressing, transitioning, toileting. They'll have a list of those and it will tell us how long it's going to take for that policy to come into effect, what we need to be helping with. They'll look at our care plans, and they might send a nurse or a doctor, too, to make sure you have those needs. Some are lifetime, some increase in value, so they're all a little different. If it's something you're thinking of and you have that policy, you don't understand exactly how it works, come see one of us so we can help you with that, because there's probably a lot more in there than you realize that you would be covered for.
And is it possible that I start too early using my plan? Or are there people who don't end up using it out of fear and then have wasted all of that money they've put in over the years?
Yeah, some people have plans that they never end up using, that they've paid into for years. A lot of the plans are lifetime, so we can look at that too. Some have a dollar cap and some are lifetime, so you'll want to look at that too, see what kind of plan you have and how long it would last you for.
So our audience who put up their hand should probably go back and just look and say, what do I actually have? And if they don't understand it, could they come and see someone like yourself?
Yes, absolutely. There's usually a declaration page that will break down some of that for you, but we're happy to go over it with you and look at it.
Thank you. So William, as a financial planner, us sitting here that are in our mid-60s, 70s, 80s, should we be running out and getting a long-term care insurance policy?
Maybe.
Maybe. Okay. Are we too old? Is it going to be too expensive?
Okay. First, let me explain the 3 main types of long-term care. I don't see too many people under 55, but I'm going to explain it. There's traditional long-term care, which I call the car insurance. You buy it in your 30s to 50s, and then if you don't use it, like Trish said, you lose it. Those have become very popular. Since 1987, they changed. It changed in 2009. And the downside of these, as you get older, they start becoming $20,000 to $30,000, $40,000 a year. So you should use it so you have to stop paying the premiums. Next is called a hybrid plan. This is where you give someone like me a whole bunch of money, we invest it, and 5 to 10 years from now, you have a pretty good long-term care plan. And if you don't use it, there is a death benefit. And that is rather new in the last few decades. It's a great tool if you're over 55 and you have time to plan, because you really don't need too much of a doctor exam because it's your own money. And then the third type is generally tied in with annuities and life insurance, where it isn't actually a long-term care plan. The term we call is riders or amendments to a contract. And what they do is, I assume everyone here collects Social Security or PERS or FERS. They just do a double payout. So if you were getting $3,000 a month for 3, 4, or 5 years, you get $6,000 a month to pay for care. And those you can get immediately. They're not too complicated, no nurses involved, and just about any age up to about, depending on the company, 80 or 85, you'll qualify because it's your own money. And there are a few nuances past that, but if you have the old company plan that you paid in, those are amazing. And that's generally where it falls.
And if I wanted to explore that further, where could I go somewhere reputable where they're not going to just take my money and put me into something that doesn't make any sense? Who am I looking for in terms of a professional if that was something I wanted to explore?
Financial advisors and financial planners. Insurance agents that just do insurance, have access to a limited product line, and the companies only train them on so much. So if you have a financial advisor, please talk to them about your long-term care needs if it's right for you, and if not, find one.
Okay, thank you. And a good way to do that is ask your colleagues, your peers, and get some references, recommendations.
And check FINRA Broker Check. It's called FINRA Broker Check to see if they've done anything naughty.
One more time for anyone who wants to write that down, the spelling of...
FINRA, F-I-N-R-A, Broker, B-R-O-C-K-E-R, Check, C-H-E-C-K. Just Google it. FINRA Broker Check, it'll autocorrect, you'll be fine.
Okay. But that was broker, not C-K-K.
C-K. FINRA Broker Check.
With a C.
I think so. I can't math. I mean, I only math. I can't word.
He's a financial advisor. He can't spell. So, just kidding. Thank you so much, William. So, Melissa, let's talk about the next one we have on our list. And you'll see in your handout we have all the different options for paying for senior living, all the ones that we could come up with and the team here on stage were able to come up with. So they're the main ones. And we're trying to work through as many of those as we can. So, Melissa, what do we need to know about Veterans Aid and attendance? Maybe we want to poll the audience. Should we start there?
Yeah, so show of hands, how many veterans do we have attending this morning?
And spouses of veterans, put your hands up too. Yeah, a lot.
Well, thank you for your service. So the VA Aid and Attendance benefit is available to veterans and surviving spouses who meet a certain criteria. And you can see from the slide here that the 2025 benefits, that's a monthly benefit that's available. It's a tax-free benefit, and it increases slightly with cost of living adjustment every year. Just one thing to note, though, is that these are maximum benefits. If your cost of care does go up, if you have to increase the level of care in, say, assisted living, or you even have to move to memory care, that benefit will not increase. It will not go up, unfortunately. So, but you can see it's a fairly substantial amount that could help defray that cost of care.
Yeah, so I'm seeing a veteran with no dependents, $2,300.
Yep.
So that really helps towards those prices we were looking at. So is this like the rent that Tricia was talking about, or this is towards the care?
It's towards the entire bill.
The entire bill.
So
okay.
yeah, if you're in assisted living and you're paying $5,000, that will go towards everything, the whole cost.
What about if I'm aging in place in my home and I need to bring in-home care to help me with my activities of daily living?
That is also possible. Just one thing to note on that, it can be a little bit more tricky because the VA don't recognize utility payments. Everything that we were just talking about, the payments that you have to pay for keeping up your home, are not a medical deduction, unlike assisted living where the entire bill is a medical deduction. So you can only deduct the caregiving costs. And so it can be a little bit more tricky because the VA want to see you're paying all of your income towards care in order to qualify. And again, I'm not going to get into the weeds, but yeah.
And Melissa will be here at the end, so if you have other questions, I'm sure you're happy to hang around and take questions.
Yep.
So let's talk about the next part in terms of qualification.
So one of the non-negotiables is official periods of conflict. 90 days of active service was one of those days during a period of war is what the criteria is. And so you can just see from the dates there, it's fairly straightforward. The only difference is that in Vietnam, if you were in service prior to 1964, the official start of the conflict, you had to be boots on the ground. And your DD-214 would have to prove that you were boots on the ground. So, okay. And so, again, you've got your handout to refer to that gives you a little bit more on the eligibility requirements. But age is over 65 or unemployable. We've just discussed the qualifying military service. Medical necessity means that you're needing, receiving, and paying for assistance with at least 2 activities of daily living. That is what the VA want to see. So be it bathing and dressing, transferring, help with ambulation, toileting, those kind of things. They want to see that you're needing those. And of course, then they compare your monthly income against your cost of care, plus whatever assets you have. So there is an income test and an asset test. There is a bright line that the VA allow you to have, which consists of your income and your assets. It doesn't include a primary residence or your vehicles. And that bright line for 2025 is $159,240. Again, it's in your handout so you can see. And then what can you deduct in terms of medical deductions? As we discussed, the entire bill from your assisted living community. Group homes, same thing. In-home care, of course, we just discussed that as well. Can be a little bit more tricky, but it's not impossible. And then any insurance premiums that you have, supplementals, dental, vision, all of those things that you can deduct as a medical expense. And that's basically it in a nutshell.
Thank you, Melissa. Are there veterans who are hesitant to use this?
I think a lot of people just don't know about it. I think that's half the problem, is that the VA are under no obligation to let you know. So unless you already know, you don't know.
So they're not going to reach out and say, I see you're in assisted living, let us help pay for it.
Exactly.
No.
So that's why it's nice, to kind of liaise with people like Trish, who can also spread the word.
Okay,
Yeah.
Wonderful. And I had something else I wanted to ask. So where do we go for more information? Who can help us? Do I go to the VA? Do I call you? What resources do we have here in the community for our veterans who are wanting to explore this now or in the future?
Sure. Well, of course, we can help. Schultz Law Group can help you with that, hold your hand through the whole process. You can also go to the VA Regional Benefit Office, which is here in South Reno. You would have to call or go online to make an appointment, but they could assist you with the forms as well.
Okay. Anything else you wanted to add, or we good?
No, I think that's
Yeah,
it.
awesome. Thank you, Melissa. So let me jump over to you, Michelle. So what are some other creative ways of us financing senior living? So we have, real estate clients, they've got homes, they come to us, they talk about, I'd like to move into this senior community, but I'm not really sure. I don't want to sell my house in case I don't like it, and then, I don't want to be homeless if the community doesn't work for me. So I know you've helped us and helped clients. What are some other strategies that people could use if they're maybe considering that at some point?
Yeah, it's a great question. And just like with what we've talked about with the other panelists, preparation is the best thing you can do. So when I talk to my senior clients, that is a topic. They don't want to sell their houses out from under themselves. What happens if they don't like it there? So prepping ahead of time by maybe looking at your financing options for somebody that maybe doesn't have buckets full of money, but they have a house and they have equity in their house. So I have a lot of seniors that will do a line of credit, so a home equity line of credit that would give them some resources to maybe pay for 6 months of independent living to see if that's what they really want to do. And that can be done very inexpensively. Getting a HELOC or a home equity line of credit is an absolutely inexpensive way to give yourself resources to be able to make a decision like that. Where you have to be careful, going forward into maybe like a reverse mortgage, is a reverse mortgage does require that you own or occupy your home. So, we don't often do a reverse mortgage for somebody that is wanting to maybe use that for any type of independent living. Where we do use it, though, is for in-home care. That is, right now, one of my biggest topics of reverse mortgages is for families to use it to pay for someone coming into their home. So that's definitely, it's got a time and a place. Another way to use a reverse mortgage, is for people that maybe have to put a family member or their spouse in assisted living and don't have the resources to do that from their savings account. That might be a great way to be able to fund that expense.
So what would that look like? I'm taking out a reverse mortgage on my primary residence, to free up money to be able to pay for my spouse to be in assisted living memory care. Is that kind of the gist of it?
That's correct. One thing to remember is a reverse mortgage is based upon how much equity you have in your home, current interest rates, and your age. So those scenarios really work best if you have a very low mortgage on your home. So, essentially saying you have a nice equity position. And then how that works is you would take out a line of credit. It's called a HECM, and that's the reverse mortgage line of credit. And that would free up capital for you to pay, whether you pay it on a monthly basis or 6 months in advance. It gives you a lump sum of money that can be used to pay for those expenditures, okay? And in turn, the party that remains in the home doesn't have to make a payment on that for their lifetime. Only property taxes, insurance, and HOA, but no principal and interest payment needs to be made.
Ever?
Ever.
So what about the horror stories we hear about these reverse mortgages, people losing their houses and all sorts of terrible things happening?
So if you go back to previous types of reverse mortgages, they did a major overhaul in 2010, which changed the whole dynamic of the program. It's a non-recourse loan. So essentially that means not you as the owner of the home or your heirs will ever have to pay back that reverse mortgage if the property value is less than what's owed. So an example would be the owner passes away, and let's say the market conditions at that time are catastrophic and the house is worth $500,000, but the reverse mortgage amount owed is $600,000. Your heirs literally give the keys back to the bank. There's no recourse to anyone in that scenario. Same for you. If you went to sell your house and, unfortunately market conditions were such where it was valued less than what was owed, the same thing exists. It doesn't affect your credit. It's truly a non-recourse loan. Another misconception is that, oh my gosh, reverse mortgages are expensive. They are more expensive than a traditional forward mortgage. However, and it's the HUD insurance. Basically, HUD has put a policy in place that covers the fact that in the event the market conditions change. It also covers the fact that, what if you live until you're 105 years old and you've had this mortgage for, 30 or 35 or 40 years? I mean, that's a real thing that can happen with our longevity. So that insurance is covering that probability that there's, a life expectancy out there that's longer than it used to be. So the best time, again, to have the conversation about reverse mortgage is way before you need it. And I do counseling sessions on these individually, and I also do, I have podcasts that I've done, and I think that's really where you're going to get your best information, folks, is listening to podcasts and talking to people that's what they do on a daily basis and asking all your questions. That way you know ahead of time.
Thank you, Michelle. So if I'm taking money out, I assume I can use that also for the maintenance of my home. Not only care in the home, but that water heater, that roof, that's so I can age in place a lot longer?
Absolutely. A lot of my clients do, there's several options. A lot of my clients will pay off an existing mortgage. So instead of making a monthly payment, they're replacing that with a reverse mortgage and therefore not having a monthly principal and interest payment. And in many cases, our clients have sufficient equity where they can also get a line of credit. So let's just say they had ample equity and now they have a $100,000 line of credit. Well, that can be used for whatever they want to use it for. They could go on vacation if that's what they want to use it for. But most of my clients are using it for home improvements. And the nice thing about the HECM is it grows over time. So your line of credit, the unused portion, is actually increasing in value over time. So it will be, a more valuable tool the longer you don't use it. So you can also use it to enhance your income, but most of my clients don't do that. Most people want to have that safety net there for when they need it.
Excellent. So, because next month we're going to talk about home safety, being able to age in place, and maybe some modifications we need to make to our home as we continue to age, grab bars, maybe a ramp, things that we might need. So we could, if we didn't have the financial means, because it's all tied up in a house, we could use a reverse mortgage for that purpose?
That is correct.
Okay, fantastic. So we often in our real estate business also have clients who come to us, they want a home that's more manageable. All of their equity is, primarily tied up in that house. They want to move to something that's, smaller, that they can lock up and go on vacation, or just don't want to deal with the yard or the 2 stories. But they'd like to have money instead of taking out a mortgage. Can the reverse mortgage help us in that way, acquiring a new home, a smaller, more manageable home?
Absolutely. That's a big topic with clients right now, wanting to downsize from that much larger family home. Maybe it has stairs, maybe it's just, it's a huge lot. But again, your equity's tied up in that home, and maybe you're a little cash strapped. Maybe you don't want to use all of the equity from that sale to fund the new home. That's where a reverse mortgage for purchase can come into play. Because by doing that, many of our clients are able to retain, whether it's $50,000 or a couple of $100,000 for their living expenses long term, yet still not having a monthly principal and interest payment. So reverse mortgage for purchase has been just a huge factor for helping our senior clients downsize.
Is there anything we need to know about? Because I know Annette and I have encountered this with several clients when we've helped them as far as moves, as far as one of the spouses getting the income, the pension, and the other one either gets a lesser amount or maybe none, where then a spouse passes away and the surviving spouse thinks they can then go get the reverse mortgage. Is there anything we need to know about that in terms of requirements of income in order to qualify for that reverse mortgage, if I'm making sense?
Yeah, absolutely. So a reverse mortgage will have a much more lenient income guideline than a traditional forward mortgage. What we're looking at is really your ability to debt service what you currently have if someone is keeping their home, taxes, insurance, the HOA, and really just your monthly bills as far as what shows up on your credit report. So we get very creative with these types of programs because we know how important they are to seniors. But yes, there is less restrictive guidelines to qualify for a reverse mortgage because we do deal with this often, where somebody passes away and unfortunately they lose a big percentage of their income, and that's where this can kind of bridge the gap for people.
So in that situation, it would behoove people to maybe put the reverse mortgage in place while they're both alive, so that when the spouse or the main income person passes, that they already have the reverse mortgage. Because if I'm correct, it can never be taken away from you.
Right. I mean, I think that, again, having those conversations ahead of time and knowing what really exists, because you have to be careful. If you have, let's say, an age gap in your marriage, so you have a husband that's maybe 82 and the wife is 72, there's a big difference in the amount of available equity to you by doing a reverse mortgage. But you also want to have both parties on the loan in almost every case because, again, you want that home to transition to that person, and again, with no mortgage payment. So, we talk about these things when we do counseling sessions with people, but I qualify them based on what their worst case scenario would be to make sure that, we don't have to go and get the reverse mortgage right away if that's the case.
Thank you. Is it clear as mud how these reverse mortgages work? No? Shaking heads? Should we do a workshop and maybe have Michelle come in and help us understand a little better the ins and outs when we have a little bit more time? So let's make that happen. Let's get a workshop set up
Absolutely.
Where we can have you come and help educate us a little bit more. So William, you're the financial planner. What other options should we be thinking about as we plan for as we all live to 120 to make sure that we can finance that? You're all shaking your heads. You're going to live way longer than you think. You are. I promise you. You're going to live longer than you think.
He's actually right on that. life expectancy has been going up 5, 10 years, every 5, 10 years. There is no easy answer, I'm sorry. If this is something you're interested in, you need to start planning now. Call a person tomorrow. Don't put it off. There are many, many tools available, but like she said, you don't know, you don't know. You got to start your research. You got to get a hold of professionals. You just got to do your homework. There's no situation, no cookie cutter where one plan fits everyone. So you have to find out what you need that's unique to your situation, because you do get those 82-year-olds with a 55-year-old husband or wife, and it changes things dramatically. So just take the time, do your research, and contact professionals.
So they'll know the questions to ask us. If we get a financial planner or advisor, they'll help us kind of work through what we have, how long we're probably going to live, how to best use what the resources we have.
Yep.
Okay. Yep.
All we ask is you tell us the truth, because we only know what you tell us, and I've seen plans derail because people lie, or they tell me something different. So just find financial planner, attorneys, tax people, put it all together, get yourself a team, create a strategy.
Do I have to use them? If I go and meet with someone, hear what they've got to say, am I compelled to use them, or can I use it as education while I try to work this all out?
Depends on the field.
Okay.
Most financial advisors, do not charge hourly. Melissa, how about attorneys?
It depends. That's what Rich is very fond of saying. It really does depend on the scenario and what it is that you're looking for, as to whether it's a flat fee or an hourly. But I can say on behalf of Rich that he's very, very reasonable about working out what it is that you need and working with you to make sure that your plan works and trying to keep it very reasonable.
So I should probably go and talk to multiple financial planners to get someone I'm comfortable with. I should get maybe a referral rather than just looking up the yellow pages.
Oh yeah, we're a dime a dozen. Find one you like.
So dime a dozen.
Screen us, Google search us, questions to ask financial advisors. Find one that fits your needs, and I'll be honest, not all of us do the same thing. I specialize in elder care, Alzheimer's, and trusts and high net worth families. My buddy, who I have food with every week, he does 401ks in big companies, and our businesses are completely different. So that's why there's so many of us. We all do different things. Screen us, ask us tough questions, grill us, give us the third degree. Have fun with it. We're used to it.
Okay. Thank you, William. So anything else in terms of what the audience should be thinking about? Should we be talking about annuities or any other tools that they can just jot down that they should be asking a planner about? Any suggestions?
In regards to living and end-of-life planning, yes, you should talk about what money you have, what emergency cash you have, annuities, pensions, inheritances, properties, oil rights, collectibles. It really goes through the gambit. Any work plans. The biggest mistake I see, and this is thanks to modern society, is your spouse dies, you remarry, and you forgot to change the beneficiary on a whole bunch of counts. So get a hold of an attorney, a CPA, or an enrolled agent, and a financial planner of some sort, advisor, and bring us everything.
Great advice. So what about those who have very limited financial resources? Does our county or state, we kind of covered Medicaid, but are there any other resources available to us that you're able to share?
Depends on your state and county you live in. Yes. Once 9th Street opens back up, it was supposed to be, it's not right now.
What is 9th Street for those of us who...
That is the Washoe Senior Center. So if you live in Washoe County, you can go there. They have free attorneys, free financial advice. They have free just about everything you can think of. Some of us do pro bono work where we give to the community. Great resources. How about Michelle, Melissa, you have any other resources for people in planning that are for the less of means?
I know that Washoe Senior Services offer a range of different options in terms of coming into the home and taking care of just light housekeeping, that kind of thing. So they have some great resources on, I would suggest going to that website.
And then, as William said, starting off with the Washoe Senior Centre, because they're pretty well connected in terms of what's available.
In Washoe, yes, Carson has one,
And also,
and then each county should have one. I'm not too sure about Tonopah, but they might.
so let's go to you, Trish. What resources or professionals would you recommend people have on their team as we all continue to age and to help us through this maze?
I would say the same that we've talked about. When I talk to families or people that come in looking, those are the things I always ask if they're veterans so that we can discuss aid and attendance, ask if they have long-term care, retirement, insurance, financial planner, reverse mortgage, do they have a house? So those are the things. Do you have a lawyer? Do you have a realtor? Can you do a reverse mortgage? Do you have a financial planner to help you figure out all of the expenses and the cost associated if you're looking at senior living?
Fantastic. So you all have binders, correct? Most of you have a binder that you picked up, and there's a slot there for business cards. I would suggest you have a business card in there for each of the people that you use. So if something happens to you and a family member needs to help out, or whoever it might be, they know who your important contacts are. Might be a good idea if you don't have it written down somewhere else. And obviously there's lots of education partners here that you probably should have their cards in there as well. Just going back to the financial planner, William, do I really need one? Do we need one? Or can we just all work that out on our own? How hard can it be?
Technically, no, you don't need us. AI has become pretty powerful. If you need a very simple answer, we are too expensive. A lot of people can just do things off Schwab, E-Trade, Vanguard if you just need to invest. The caveat is where we come in to help is when you have situations that are beyond what's on a Google search. For the same reason you have a doctor, WebMD will tell you you have cancer just because your head itches. If you just need to know what ointment to put on an itchy scalp, Google's fine. Don't pay us. If you have a unique situation, then yeah, worth the money.
Okay, thanks, William. Michelle, what resources, professionals should we have on our team? Do you have anything different than what was said or more detail you want to go into?
Well, I think that having an attorney that you're comfortable having a conversation with, specifically at this point in time, probably something more like a trust attorney, because here's the thing, folks, is as a mortgage lender, I get to see it all. You know, I'm dealing with every possible situation, divorces, reverse mortgage, first-time home buyers, whatever the case may be. But one of the biggest things I see is people play Russian roulette with their title to their house. And that is something that cannot be done because that can create such an issue for you at the point in time where you may need a reverse mortgage or you may need a mortgage, a line of credit. What I mean by that, don't put your kids on your title to your house. The minute you add somebody on, you're adding somebody else's stuff. They may come with the IRS tax lien. Now guess what? They own half your house and you can't get any money out of it. These are real life stories. These are real life stories that have happened in the last 6 months with clients of mine who decided to put a girlfriend on and a son. And it also creates a probate situation. So, this is something to talk to a company like Melissa's company about in getting your estate set up so you are giving your spouse or your heirs the easiest channel to liquidate your property. And that's the biggest piece of advice I could give, at least, as far as having that person on board, is start there. And then, again, talk to a financial planner, interview a mortgage professional, somebody that's well-versed in senior programs, and, just do your due diligence ahead of time.
So the one I really took away from that is even though I want to give the home to a child, I shouldn't just put them on title. There's a better way to do it. I could be hurting myself in a big way.
Absolutely. I work and speak on experience, and I take notes on a regular basis of the what not to do. And that is definitely a what not to do in estate planning. Spend a little bit of money and have that conversation with an attorney, especially if you have a home and some assets. You want to make sure that your transition goes accordingly to, again, the spouse or to whoever your heirs are. And that can really only be done by having a trust in place, or at least some directive of what needs to happen. But so many people think, oh, well, this will help me avoid probate if I add somebody onto title. But again, you're bringing that person's past with you. Like I had recently a client that added his girlfriend on and to title, and then they broke up.
Oh.
Yeah, oops. He owned the house.
Did she get half the house?
He owned the house for 30 years, and she sued him for half of the equity. Not so good. So that's the reason for my comments here today.
I think you've shared other ones. A child who ends up with a drug or a gambling addiction, and then
absolutely,
or in an auto accident and has been sued, and now
Yes.
the house is part of the whole.
Protect your assets.
Okay, thank you.
That includes bank accounts, investment accounts, all those things as well.
Melissa, what advice do you have in terms of resources or other professionals?
Well, I think Michelle kind of said it very well that, it's the old cliche, if you fail to plan, you plan to fail. And so it's, I know we say ad nauseum, but don't waste time thinking about it and do it. I think one of the most important things in any estate plan is to ensure that at the very, very least you have powers of attorney in place. I think there's a huge percentage of our clients that come in crisis mode because their parents didn't set forth powers of attorney, and now they're scrabbling to try and get them into assisted living, and they don't have the authority to do that. It's a gift you can give to your family, to your loved ones, to people who are going to step in and make sure that you are able to transition into the next chapter of your life seamlessly. And pairing with, a financial planner, you've got a full and complete plan in place, and you don't have to worry about it anymore.
Wonderful, thank you. And who has a schedule in front of them? Don't we have one on trusts and in July maybe, a topic? Estate planning in July? Yeah, so if that's all new and foreign to you, you might want to come along to that seminar. We'll have Rich Schultz from the Schultz Law Group. I think we're going to have someone from Alliance Trust, and I can't remember who else will be on the panel. If you have a question, raise your hand. Who has questions? Just so we can kind of gauge how many questions we have. Oh, we don't have a lot of questions today. Our panelists have been super thorough. So wherever you saw a hand, Rich. And I hope we can have some fun with this, because Melissa's in charge of the law firm today, and Rich is working for Melissa, and Melissa's going to have Rich running all over the room. Yeah.
I have two questions, actually. One is, what if your house...
Could you just hold the microphone a little closer?
What if your house is already paid off? Can you get a reverse mortgage on it to pay your care later?
Great question. So
And
let's
the-
start with that question first, and then
Okay.
we'll come back to the second one. So that'll be for you, Michelle. If
Yeah,
my house is paid off.
absolutely. That's an ideal situation, because having a free and clear home gives you the ability to get the highest amount of equity out of your home on a reverse mortgage.
And the other question was, if you have someone who needs to go into the VA, the veterans home, how long is there usually a waiting period to get in?
Ooh, that really, it depends. You just have to call and get on the list, and they can let you know then, an expectation.
So if I was thinking in the next year, I might want to call them now and find out how long that waiting list is to get some sort of
It
idea.
probably is a really good idea,
Yeah.
just to find out.
Great questions. Oh, Debbie.
Yes, two questions. One is, what is the physical disability waiver that was listed under paying for senior living? And second is, since it's older Americans month. And today there's a fair at the Auto Museum. Are you guys represented there or at any of the other events this month?
So in terms of us being represented there, no, because we're here. We had wanted to be there, and I take responsibility. I messed up not realising that event was on May 1st because we were there last year. So bad planning on our part. We'll try to make sure we don't conflict the two for next year. And then the second part of your question was the disability that was in the handout. That's a service provided by Washoe County for those who are lower financial ability, and the county has some services for bringing in care into homes. And I think we had the website address there that has more information along with the phone number, and they're more than happy to take calls and explain the program.
If you have a trust and a will, which one supersedes each other? And if you have a will, why do you need a trust?
That's probably more of a rich question, and it is a good question. I think a lot of people get confused between why a will versus a trust. Basically, a trust will help avoid probate, ultimately, and court oversight, and make sure that everything is kept privately. A will just really dictates who gets what, and there will be a probate after that.
So a will doesn't help me avoid probate.
Exactly.
I need the trust.
You need the trust in order to avoid probate.
And if I have a trust, I also have a will?
I'm sorry, say again?
If I have a trust, I still have a will too, though, for things that were...
Yes. So typically there'll be what's called a pour over will, which simply means that if you have assets outside of the trust at the time of your passing, those assets will be transferred into your trust because they assumed that's what you meant to do.
Thank you, Melissa. She did good, didn't she, Rich? I know who does all the work.
Anything to add?
Oh, yeah. You don't need to show up. Yeah. No more questions? I'm flabbergasted. Oh, yes.
I have a question about reverse mortgage. If your house is in a living trust, does that make a difference?
No, we can allow you to title the property still in your trust. We're lending to you individually, but you can have a seamless transfer of title when we do that loan into your living trust. We just don't allow irrevocable trusts of any kind. So as long as it's your family trust, like you or you and your spouse, not a problem.
Good question.
Sorry. For Melissa, what is your? How do we hear your podcasts?
I'm sorry, I didn't quite hear that.
Oh, how do we hear the podcast? I think it was Michelle that might have been mentioning a podcast
Michelle.
on reverse mortgages. Where do we find your podcasts,
Where
Michelle?
do we find your podcasts?
Yeah, so the podcasts are on our YouTube channel, which is the Holbert Brazil team. So you can find it there. Or if you just message me, you can, if you look that up, you can find it under our YouTube channel. But if you message me directly, I can send you the link.
Do you have information here out at the table by any chance, Michelle?
I have it I have my business cards and I have some flyers out there on the table. So if you take that, you'll have an automatic contact to me where you can email me, and then I can just email you, whatever podcast you're interested in. And then, I lost my train of thought. I was going to say something else, but they're out on the table. There's all my contact info, or in your binder, my business cards in there.
And the other question is in regards to long-term care insurance. There was a mention of 3 types: long-term care insurance, the traditional, the hybrid, and then there was a third, which is an annuity of some sort. And my question is if we already have long-term care insurance that we purchased like 25 more years ago, is it worth it to get an annuity, a separate annuity as well?
So the instant form of type, per se, is a life insurance or annuity plan. Correct, that's the third type. And an annuity is generally created to generate income for life. It's different than a life insurance plan, long-term care plan. They can work in tandem, but they're meant for different things. So an annuity pays out double when you go into what's called a nursing care rider. You can still use your long-term care, and when you get down to the specifics, grab your statements, find a person, they'll explain the exact details based on what your contract allows that you already signed.
So I have a question on that, William, because different people have said my long-term life insurance policy, the premiums have been going up. Do I keep my policy or do I let it go? So you or Trish, would you have any comments? Do I just start paying the higher premiums? Do I take an option where they've said to have reduced benefits? Any advice? Because we paid a whole lot of money into this thing.
How long you gonna live? I have told people to keep paying it. I've told them, cancel, you're wasting your money. It really is unique to your life.
So we'd first want to understand what our policy provides.
Oh yeah, that book of paperwork that puts you to sleep. People like me enjoy reading it. Just hand it to us, yeah.
Okay, so before cancelling, I should probably go talk to an expert to fully understand what I'm maybe doing.
Yeah, just don't call their 1-800 numbers. They're awful. Just find an actual person.
Okay.
Yeah.
Okay, thank you. Where's our mic? Jim.
This is for William. With the volatility in the markets these days and the uncertainty about our length of life ahead and how our income stream might come primarily out of the market, stocks and bonds, there's annuities, right?
Can you hold that a little bit closer, Jim, so we can all hear?
Can you give us a brief explanation of annuities, those that limit your losses, those where your losses are equivalent to the stock market, so on and so forth?
Okay, not all annuities limit losses. There's many, many different types of annuities. Most people hear of what's called the indexed annuity. That may or may not have to do with the market. You guys all collect Social Security. An annuity is a self-funded Social Security plan or pension. That's all an annuity is, unless you're using it as an estate feature for kids. Getting into the market, I know we don't have time for me to explain that. I'm sorry.
But Jim, you're welcome to go and grab William after this and chat with him. Down the back, and then we're going to come over. Who's next? This one's next over. Thank you, Melissa.
So I have a twofold question on reverse mortgage, and then also we need somebody to talk about the boots on the ground for the Vietnam VA situation. But my reverse mortgage questions are, when you're talking about the reverse mortgage for sale, and the person has to live in it, so does the reverse mortgage end up on the new purchase is the question. And then the other thing is, can you please verify that when you have a reverse mortgage and you pass away and the house is going to be sold, the reverse mortgage people only get how much the mortgage is for. Any additional equity goes to whoever it would go to otherwise.
Yeah, I'll answer your second question first. That is correct. So think of a reverse mortgage as a mortgage. There's a few additional features that protect you, the recourse piece of it. So if somebody sells their home, or if it's left to an heir, and the value of the home is $800,000, but the amount of the reverse mortgage is $400,000, then less selling cost, that heir would retain that amount of money. So it's titled just like it would be if you paid cash for the house or you did a forward mortgage, and it's sold the same way. There's a few nuances with the time frames involved, like technically you're supposed to be able to sell that house within 6 months. That's how long the reverse mortgage lender, because remember, there's not a payment being made. In most cases, if somebody passes away and there's a mortgage against it, somebody's making a payment. In this case, there's not, so they really want you to dispose of the house within 6 months. There are 2 extensions that are allowed. And then the second part of your question, and I apologize, can you repeat that? Because it was more like, were you saying there's an existing reverse mortgage on the house that they're in right now?
No. If we're getting a reverse mortgage for sale, for
purchase?
For purchase, then, but you have to live in the house, right, to get the reverse mortgage. So does that reverse mortgage, I'm assuming that ends up on the purchased property?
Absolutely. Yes, it's the home you're acquiring.
So does the home have to be sold? If mum has a reverse mortgage, the house is worth 500, the reverse mortgage is 200. Can I pay out that 200 and keep mum's house versus having to be sold off?
Yes, you can't keep the reverse mortgage,
No.
but yes, you can keep the property. So if, you would have to either pay off the reverse mortgage or obtain your own financing to pay off the reverse mortgage. But absolutely, an heir can keep the property.
Thank you. Where's our mic runner? Oh, thank you. Nikki.
Hi, this question is for Trish. Trish, could you talk about, when someone buys a home and they get a mortgage, they have to qualify for the mortgage and they go through that process. When someone's moving to a senior living community, independent or assisted living, could you talk about what that process looks like, how you know if they can afford it, what kind of application they have to go through, assets if they have to have them? What is their qualification process for that?
It's a great question. I don't know how every community works, but most of us don't really do any kind of check. If you come to us and say you're ready to move in, and we go over costs and pricing, and you say that's acceptable, then you give us a check and you move in. So there's not a financial check. We don't do any kind of check like that. We take it that you can afford it if you've come to us and are willing to move in.
So can I just pay for the first month and then just be there forever until you try to work out how to get rid of me?
Yeah, not quite like that.
No? Okay.
Just like an apartment complex, we would have to evict somebody if they couldn't pay any longer. We do try to work with families if funds are running low. Some people will outlive their funds, and we can help you try to find a Medicaid and next steps, but it's not a problem that we encounter a lot where somebody moves in and can't pay. Everybody knows up front what the costs are.
Thank you.
I have a question regarding reverse mortgage. Is it typical for the reverse mortgage company to evaluate your home and give you a lump sum that's 50% of the value of the home? Is that typical for the industry? And then if you disagree with the valuation they've made of your home, according to what you see on Google, Zillow, how do you contest what they're offering you?
So the first part of the question is, the formulas exist that are set by HUD. So it doesn't vary from lender to lender. Pricing variations, such as what the margin is, can vary from lender to lender, but how we calculate the loan amounts are going to be consistent. So what happens is, remember, it's based on age. So 50% might only be for somebody that is 90 years old. If you're 62, which is the entry level to reverse, you may be down at 35% of your equity that you can borrow. The second part of that is regarding the evaluation. So the appraisal is, every lender has access to their appraisal management companies, which is essentially a third party. They're FHA approved, and they are contracted to appraise that property. So they have to, provide comparable sales for what is sold within FHA's allotted period of time, the last 3 to 6 months, and that's how they will establish the valuation. A client is allowed to contest that if they have credible data that shows that the appraiser missed something, or there's a material defect in that appraisal. The appraiser said my house was 2,000 square feet and my house is really 2,500 square feet. If there's something that was truly missed, that doesn't happen very often. Usually, the appraiser does their due diligence and has the most up-to-date comps, but there is a process that if that does happen, you as the consumer can acknowledge that and try to help provide additional data if you think it will help.
Thank you.
Does that answer your question?
I'll have to think on that, because at times, as an average Joe, you get your information as you can. And when you see the general information gives a certain price for all the homes that are similar to yours at a certain value, and then the reverse mortgage says, no, that's not correct according to our estimations and, as you say, your guidelines, you question it.
Yeah.
You know, you have to educate yourself on how to challenge that.
Right. There's no different strategy in a reverse mortgage appraisal versus any other type of FHA appraisal, because remember, it is an FHA loan. I think a lot of times with the data we have available to us in front of us all the time with, Zillow and all the online forums, it gets a little clouded. But, I would encourage you, if this is something that's happened to you, talk to your mortgage lender about potentially, doing a rebuttal. But the proof is on you, essentially. You have to be able to prove that there is something that's a material defect in that appraisal, or they didn't use a comparable sale that they should have. Because, that does happen on rare occasion, but it does happen. Appraisers are human. But that's the burden of proof is going to be on the consumer.
Thank you, Michelle. That's great. Debbie, you have another one down here?
Good
yes,
morning.
Sir.
If you have multiple houses in a few states and your will and trust was made a few years ago in California and now you've moved to Nevada, is there an obvious advantage of having that redone in Nevada?
I think probably Rich might be better off answering that technical question. But certainly when you move states, I think the most important thing is to make sure that at least your powers of attorney align with the statutes for that particular state. As for your trust, I guess, again, it's it depends. Would that be accurate, Rich?
Yeah. It depends on how your trust is drafted and whether or not it makes extensive reference to California law. And there's some substantial differences in terms of privacy and what beneficiaries know and don't know. Possibly, yeah.
So worth a review then, at least a review. You might not have to redo it, but worth having someone look it over.
Yeah, getting it reviewed is well worth doing.
Yep. Thank you. Do we have any more questions before we wrap up? So I just want to thank you all for being here, taking the time to invest in yourselves, and to thank our panelists for giving up their time to help us all be better educated.